Every single car company in the world, not just Ford, is losing money selling electric vehicles, except for Tesla.
Seems like just yesterday when Ford was killing it in the auto industry and smashing record after record. But lately, it's been one setback after another. Recalls, layoffs, and now a production shutdown that's been dragging on for weeks. No W in the midst of all this. Ford just dropped a bomb that's got the whole car industry buzzing. This isn't your average announcement. We're talking about a move that could completely change the game for Ford and the entire auto market. So what exactly did Ford just announce? And how will this impact the American automotive giant? Let's dive in and find out. For decades, Ford was like the superhero of the automotive world. This was the company that practically invented the idea of putting the world on wheels. They were pioneers, innovators, and a symbol of American ingenuity. But somewhere along the way, the magic started to fizzle out. It wasn't just one big mistake either. It was a whole bunch of little cracks that eventually turned into a pretty big problem. Think about it. Outdated systems, leadership that didn't seem to understand what the market wanted anymore, and internal struggles that no amount of shiny marketing could fix. These were big deals, and while Ford was trying to figure it out, competitors like Tesla and Toyota were zooming ahead, leaving Ford to play catch up. Now, fast forward to today, and things are really hitting the fan. Ford's CEO just made an announcement that's got dealers freaking out. Over the past few years, Ford got a little too comfortable with hiking up prices. They jacked up MSRPs and, in some cases, even asked buyers to pay over MSRP for popular models like the Bronco. At the time, demand was crazy high, so it seemed like a solid move. But now, not so much. Take a walk into any Ford dealership these days, and you'll see what we mean. Rows and rows of shiny F-150s, Broncos, and Rangers are just sitting there, gathering dust. What used to be hot-ticket items that flew off the lot are now piling up so fast that dealers are literally running out of room. Some are even parking these trucks and SUVs on grassy fields because there's no space left in the main lot. In fact, there are far more new 2023 models on sale than 2025 models, a problem unique to Ford in today's truck market. As of November 2024, there are still 5,063 new 2023 Ford trucks sitting on dealer lots across the country. That might not sound like a lot at first, but when you realize these make up 2.5% of all new Ford trucks, it's pretty eye-opening, especially this late in the year. Most other brands have already cleared out their older models, so seeing this many 2023s still up for grabs raises some eyebrows. Ford's 2025 models are practically ghosts. Out of the 200,000 plus new Ford trucks available in the United States, less than 1,000 are 2025s. That's right, fewer than 0.5%. Now, let's put this into perspective by seeing how Ford stacks up against other big names in the truck game. Chevrolet, for instance, seems to be playing it smart. They've already shifted more than half of their truck inventory to the shiny 2025 models. As for those 2023s, they're nearly extinct on Chevy lots. Ram, on the other hand, isn't exactly cruising ahead, but is still doing better than Ford. Only about 2% of Ram's current stock consists of 2023 models, roughly 2,100 trucks. It's not a perfect scenario, but it sure beats Ford's numbers. A year ago, getting your hands on a Bronco felt like winning the lottery, but now you can find them everywhere. This isn't just about the Bronco though. The Ford F-150s, one of their most iconic trucks, are also stacked so deep on dealership lots that the only way to move them is to slap on some hefty discounts. And it's not just one or two dealerships, it's a nationwide problem. The Ranger has the same story. You couldn't find one a few months back, and now they're practically begging people to buy them. Now, despite dealerships practically drowning in unsold 2024 models, Ford's CEO just announced plans to raise MSRPs for 2025. Yes, you heard that right, raise prices. It's a head scratcher, especially when you consider that vehicles aren't even moving at the current rates. Unsurprisingly, the announcement sparked outrage from customers and dealers alike, leaving many wondering, what is Ford thinking? Ford dealerships are running out of space, literally. They're currently so overloaded with 2024 inventory that it's becoming a logistical nightmare. Now, if they can't clear out the current stock, where are they going to put the shiny new 2025 models? And selling those at higher prices, that's going to be an even tougher hill to climb. Take the Ford Maverick, for example. Just a few months ago, these trucks were nearly impossible to find on the lot because demand was sky high, but now they're everywhere. Dealers are scrambling to offload them, offering discounts of $1,500 to $2,000. The Maverick is still one of Ford's lowest priced trucks, so these discounts are making it an attractive option. You can now snag a base trim Maverick for under $35,000, which isn't a bad deal, and because it's not outrageously expensive, the Maverick is selling decently, at least compared to some of Ford's other vehicles. Let's talk about the elephant, or should I say the herd of Broncos, clogging up Ford dealership lots across the country. It wasn't that long ago when the Ford Bronco was the car to have. Remember when it made its big comeback? Everyone and their dog wanted one. People were putting their names on waiting lists. Dealers were tacking on wild markups, and even Ford employees weren't catching a break. They were shelling out extra cash, just like everyone else. It was the ultimate game of take it or leave it, and people were taking it at any price. Fast forward to today, and things are looking very different. Those once coveted Broncos, they're now gathering dust on dealership lots. Seriously, dealers are running out of places to park them. You'll see rows of unsold Broncos lined up like dominoes, spilling onto grassy lawns just to make space. And what are they making room for? You guessed it, more F-150s, including the hype 2025 model. It's hard to believe the Bronco's rapid fall from grace. What once had people paying top dollar has now become an inventory nightmare. The 2024 Ford Bronco Badlands is a prime example. On paper, it's everything an off-road enthusiast dreams of. Rugged build, check. Adventure-ready design, double check. But here's the kicker. Its MSRP is a jaw-dropping $70,770. That's more than enough to make you think twice, especially when its biggest rival, the Jeep Wrangler Rubicon, comes in at a much friendlier price point. And here's the thing, it's not that the Bronco is suddenly a bad car. Far from it. It's just that the demand has cooled off while the supply has gone through the roof. Add to that rising interest rates and a changing economy, and suddenly that shiny Bronco sitting in the showroom feels more like a splurge than a must-have. The Bronco's saga is a classic tale of supply and demand gone awry. Back when it first hit the market, Ford could barely keep up with orders. This scarcity made it a hot ticket item, and dealerships were more than happy to cash in with steep markups. But as production ramped up and interest cooled, the market flipped. Now, instead of fighting over Broncos, buyers hold all the cards. Dealers are practically tripping over themselves to move these SUVs, offering incentives and slashing prices in ways we haven't seen since the big SUV bust of the early 2000s. Dealers are offering discounts to move these off the lot, but they're not exactly generous. A $5,600 dealer discount paired with a $2,000 factory rebate brings the total discount to $7,600. That sounds decent, right? Except it still leaves the Badlands priced at $62,900, which is a tough sell in today's market. If Ford wants to move these, the discounts need to be way bigger, because right now, $62,900 is still a lot for an SUV that's just sitting on dealership lots. If you think the Bronco's pricing issues are bad, wait until you hear about the Ford Expedition. It's one of Ford's biggest and most expensive SUVs, and it's taking a hit too. The Expedition comes with MSRP prices starting around $85,000. Yes, you read that right, $85,000 for an SUV. Now, dealers are offering massive discounts, up to $11,000 in some cases, to try and move these behemoths. That brings the price down to about $74,000, which is better, but still feels steep. Honestly, most people would expect an Expedition to be in the mid-$60,000 range, not flirting with $70,000 or more. And then there's the F-150, Ford's bread and butter. Even these legendary trucks are piling up on dealership lots. To make room, dealers are slashing prices by as much as $10,000 on some trim levels. For the first time in a while, you can find certain F-150 models priced under $50,000, which might actually tempt buyers who've been holding out. To make matters worse, Ford's venture into electric vehicles has encountered significant financial hurdles. In the third quarter of 2024, things got pretty rough financially. Their EV division, called Model E, racked up a hefty $1.2 billion loss. And if you think that's bad, buckle up, because the total losses for the first 9 months of the year hit a jaw-dropping $3.7 billion. Now, here's the kicker. Ford sold about 32,000 EVs during that time. Do the math, and that's roughly $37,500 lost per car sold. Ouch, right? This isn't just a Ford problem though, it's more like an industry-wide EV tug of war. Ford's CEO Jim Farley didn't sugarcoat it. He called out a global price war that's heating up faster than a Tesla battery. The problem? Too many EVs and not enough buyers. Add to that an explosion of new EV models flooding the market, and you've got automakers slashing prices left and right just to stay competitive. This hyper-competitive pricing may seem like a win for consumers, but for companies, it's a profit nightmare. Ford's not the only player in the EV game facing tough times. Big names like Stellantis, the parent company of Ram, Jeep, and more, are wrestling with similar problems. Overproduction is hitting hard, leaving automakers with more vehicles than buyers, forcing them to drop prices even further. Let's talk about the F-150 Lightning, Ford's electric version of their legendary pickup. At first, it seemed like a brilliant idea. Take America's favorite truck, electrify it, and ride the EV wave into the future. But it has been a disaster. And again, that's mainly because of its price. Ford slapped a sticker price of nearly $90,000 on the F-150 Lightning, and let's be real, that's a lot of money for a truck, even an electric one. Sure, it's packed with cool features and EV tech, but most people just aren't biting. The demand is so low that Ford has been forced to halt production completely until next year. While it was the top-selling electric truck in 2023, outperforming competitors like the Rivian R1T and Hummer EV, its sales haven't quite hit the high notes Ford was aiming for. In response, Ford announced significant changes at its Rouge Electric Vehicle Center in Dearborn, Michigan. Out of the 2,100 workers there, 1,400 are being reassigned or offered retirement packages. Here's the breakdown. 700 employees are moving to the Michigan assembly plant in Wayne to work on the Bronco SUV and Ranger pickup. The other 700 have the option to transfer to different Michigan facilities or take a $50,000 retirement package. Ford emphasizes that these are not layoffs. The retirement option is entirely voluntary. This move suggests that the demand for the F-150 Lightning isn't as strong as Ford anticipated. Overestimating sales might have led to dealerships being stocked with more Lightnings than they can sell. This situation isn't unique to Ford. The broader electric vehicle market is experiencing growing pains. Factors like high prices, limited charging infrastructure, and consumer hesitation are affecting EV adoption rates. With F-150 Lightnings piling up at dealerships, even the dealers themselves are saying, no thanks. They've been turning down new shipments because they can't sell the ones they already have. And when production stops, so do the jobs. The hourly workers and assemblers who build these trucks are left in limbo, all because Ford bet big on a product that customers don't want, at least not at this price. It's not just the price tag, although that's a huge part of the problem. The EV market is growing, but buyers still expect affordability and practicality. For $90,000, they want a luxury experience, not just a greener version of a work truck. Meanwhile, competitors like Tesla and Rivian are offering EVs that feel more innovative and, frankly, cooler, making it even harder for Ford to justify its pricing. Ford has also now become a pro at something else: recalls. It's almost like a tradition at this point. You get your shiny new F-150, and not long after, you might get a friendly letter in the mail saying, hey, we need to fix something. The F-150 has been recalled for a lot of reasons over the years. Some are pretty minor, while others not so much. Ford has had a recurring issue with the F-150's transmission. One major recall involved the 10-speed automatic transmission unexpectedly shifting into first gear while driving. Imagine cruising along at highway speeds, and suddenly your truck decides it's back to square one. There's also been a recall for seatbelt fires. In some models, the seatbelt pretensioners, those little devices that tighten the belt in a crash, could create sparks during deployment. In rare cases, those sparks could start a fire. Electrical problems have also been a headache. One notable recall was due to issues with the truck's wiring, which could lead to a loss of power or even cause the truck to stall. That's not something you want happening on a busy highway. Some F-150s were recalled because of issues with the brake master cylinder, which could result in a loss of brake fluid. Less brake fluid means less braking power. Definitely not ideal when you're trying to bring a big truck to a stop. Faulty airbags have been another recurring problem, either not deploying when needed or deploying when they're not needed. Both scenarios are equally bad. Now many dealers are beginning to back out. AutoNation Inc., one of the heavyweights in the auto dealership game in the United States, recently decided to sell 8 of its dealerships during the third quarter of 2024. Here's the kicker: 5 of those were Ford franchises. They didn't just give them away though, they made a cool $156 million from the sale. Sounds like a win for AutoNation, but what does it say about Ford? AutoNation is all about making money. They don't sell cars for fun, they sell cars to rake in profits. So if they're dumping multiple Ford dealerships, especially ones they've called underperforming, it's not just a coincidence. It's a sign that they're losing faith in Ford's ability to perform in the current market. And when a big player like AutoNation loses confidence, others might start to follow. Let's talk about why these dealerships were labeled as underperforming in the first place. The auto market is in a weird spot right now. Consumers are more cautious than ever, especially when it comes to splurging on high-ticket items. Ford's lineup, like the F-150 Lightning, comes with a hefty price tag, and people are hesitating to commit. Add to that some supply chain struggles, rising interest rates, and competition from electric vehicle startups, and it's clear why these dealerships might not be raking in the cash like they used to. AutoNation likely decided it wasn't worth the headache of holding on to lots full of vehicles that aren't selling fast enough. And this isn't just about one dealership group, it could be a ripple effect across the industry. Here's where it gets really interesting. AutoNation's move could inspire other dealership groups to reevaluate their own relationships with Ford. If more dealers decide to step away, Ford could be in for a rough ride. Dealerships aren't just places where cars sit pretty, they're Ford's direct connection to customers. Losing dealerships means fewer touch points with buyers, less visibility, and a whole lot more pressure on Ford to figure out how to keep those sales numbers up. This could even force Ford to rethink its strategy. Are their vehicles too expensive for today's market? Is their EV push not resonating with consumers? These are questions they'll need to address fast if they want to avoid more dealership exits. All these make you wonder why Jim Farley thinks this is the best time to increase prices. Customers are already side-eyeing high prices, and rising interest rates are pouring salt on the wound. Financing a car is getting pricier, which means fewer folks are willing to throw down cash for models that seem overpriced. Ford's leadership is banking on a demand rebound, but honestly, in today's economy, that's a gamble that could go either way. So what's really driving Ford to raise their prices? Well, there are a few reasons, and none of them are simple. Remember when car prices skyrocketed during the pandemic because of supply shortages? Well, that pricing strategy is coming back to haunt Ford. Customers got used to inflated prices, but now they're over it. Add in rising interest rates, and the monthly payments on car loans are looking scarier than ever. Buyers aren't biting, and Ford's trying to figure out how to adjust. During the pandemic, everyone was screaming about supply chain problems. Now, it's the opposite. The bottleneck is gone, and Ford ended up overproducing vehicles, assuming demand would stay through the roof. Spoiler, it didn't. So now there's an oversupply issue with lots full of unsold cars, and that's a financial headache no one wants. Also, consumer tastes are shifting. Electric vehicles and hybrids are all the rage, and while Ford has made progress with models like the Mustang Mach-E, they're still not quite playing in Tesla's league. People want cutting-edge tech, efficiency, and affordability, and Ford's trying to catch up while juggling legacy gas-powered models. Now, let's talk a little about Ford stock. Ford's third quarter financial report just dropped, and while there's some good news tucked in there, the overall picture has Wall Street raising an eyebrow. The automaker's profit numbers came up short, and to make matters worse, they trimmed their full-year earnings outlook. The result? Ford stock took a sharp 4% dive in extended trading on Monday. Let's start on a positive note. Ford's revenue for the third quarter hit a solid $46.2 billion. That's a 5% bump compared to last year and actually beat analysts' expectations, according to Visible Alpha. In a time when many companies are struggling to maintain growth, Ford's ability to bring in more revenue is a bright spot. But here's where things get tricky. Ford's net income dropped significantly to $900 million or 22 cents per share compared to $1.2 billion or 30 cents per share during the same quarter last year. That's not just a dip, it's a noticeable slide that fell well below Wall Street's estimates. And then there's the revised earnings forecast. Ford cut the top end of its full-year adjusted earnings outlook, now projecting about $10 billion. Their previous range was $10 billion to $12 billion, so this revision wasn't exactly what investors wanted to hear. When companies lower expectations, it's like throwing cold water on investor enthusiasm. Unsurprisingly, Ford's shares took a hit, dropping more than 4% in after-hours trading. This isn't the first bump in the road for Ford this year. In the second quarter, their earnings also missed estimates, which started to shake investor confidence. Adding fuel to the fire, Morgan Stanley recently downgraded Ford's stock, citing concerns about profitability and long-term growth in a challenging market. Combine these factors, and it's clear why investor sentiment has soured. So, what's driving Ford's struggles? A mix of internal and external challenges. Firstly, the ongoing United Auto Workers UAW strikes have disrupted operations and put pressure on profit margins. Secondly, higher production costs, thanks to inflation and supply chain issues, have squeezed Ford's bottom line. Lastly, the electric vehicle market, a key focus for Ford, has become fiercely competitive, with rivals like Tesla and even newcomers like Rivian making big waves. Ford is still banking on its Ford Plus strategy, which focuses on EVs, commercial vehicles, and connected services as the key to its long-term success. While challenges remain, the automaker is working on cutting costs, improving efficiency, and adapting to the fast-evolving global market. In the short term, Ford's stock might face turbulence, but the company's ongoing push toward innovation and its solid performance in the hybrid and traditional vehicle markets could provide some stability as it navigates these challenges. For now, though, investors are left wondering, will Ford's ambitious bets pay off in the long run, or is the road ahead bumpier than expected? Ford, once synonymous with groundbreaking innovation thanks to iconic models like the Model T and Mustang, has faced significant challenges in recent years. As the auto industry shifted gears toward electric vehicles and advanced technologies, Ford found itself grappling with stiff competition, especially from EV leaders like Tesla. Ford's internal inefficiencies have been a major hurdle. Outdated manufacturing practices and supply chain disruptions led to delayed vehicle launches and frustrated customers. These operational hiccups were further compounded by departmental conflicts, where different teams often clashed over priorities and direction. Leadership struggles also played a part, with an apparent lack of cohesive vision. Instead of focusing on long-term innovation, decision makers were often caught up in chasing short-term gains. One of the biggest points of contention within the company was whether to double down on their legacy of traditional vehicles or make a bold pivot to EVs, a move that demanded massive investments. These internal debates not only delayed critical decisions, but also created confusion among employees and stakeholders, hurting morale and tarnishing Ford's reputation. These internal conflicts and inefficiencies had tangible consequences. Projects were delayed, quality issues cropped up, and Ford struggled to meet market demand for newer, more sustainable models. The company's inability to adapt quickly to the growing demand for EVs and advanced technology hurt its financial performance, causing sales to dip and investor confidence to waver. While competitors raced ahead with cutting-edge innovations, Ford appeared stuck in a limbo, torn between preserving its traditional roots and embracing the future. This hesitancy made it harder to regain market share in a rapidly evolving industry. Ford's story is one of resilience. While the company has stumbled in the face of industry transformation, its legacy as a pioneer of innovation still holds weight. To reclaim its position at the forefront of the auto world, Ford will need to fully embrace the challenges of the modern market, invest heavily in sustainable technologies, and foster a culture of adaptability and collaboration. As the industry speeds toward a future defined by electrification and advanced technology, the question remains, can Ford reimagine itself for a new era, or will it remain a relic of its own history? Only time and the company's next moves will tell. So what do you think about Ford's troubles and its decision to raise prices in 2025? Let us know in the comments section. Also, make sure to like this video, subscribe to our channel, and activate the notification bell to stay updated with all our latest videos. While you're still here, click the video on your screen to see more interesting content like this one.